Stop scrolling right now, because what I'm about to tell you in the next 30 minutes could be the difference between you becoming a millionaire or losing everything you have ever worked for in your entire life. I'm not exaggerating. I'm not being dramatic. And by the end of this video, you will understand exactly why I'm speaking to you with this level of urgency. Today is Tuesday, January 20th, 2026. The exact time on my screen right now shows 3:14 p.m. Eastern Standard Time. And exactly 3.5 hours ago, something happened that mainstream media is desperately trying to bury. Something that just triggered the complete implosion of the global banking system as we know it. Something that will make the 2008 financial crisis look like a minor inconvenience. At 11:43 a.m. Eastern Time, President Donald Trump signed a single piece of paper, one signature, one executive order. And within minutes, that signature detonated a $500 billion financial nuclear bomb that has been ticking underneath Wall Street for the past 2 decades. Here is what terrifies me. 99% of people watching the inauguration today have absolutely no clue what just happened. They saw the ceremony, they heard the speech, they watched the celebration, but they completely missed the single most important financial event of their lifetimes, happening right in front of their eyes. You clicked on this video, which means you are different. You are paying attention. And what I am about to share with you over the next 30 minutes will change everything you thought you knew about money, about banking, and about your financial future. But I need to warn you about something before we go any further. What you are about to learn will make you angry. It will make you scared. And then it will make you realize that you have approximately 6 hours left to take action before the greatest wealth transfer in human history locks you out permanently. Welcome to Boring Currency Archive. Let us dive into exactly what just happened and why $1,000 silver is no longer a fantasy, but a mathematical certainty. So what exactly did Trump sign at 11:43 this morning? Executive Order 14107, officially titled the Strategic Monetary Metals Security Act. Now that sounds boring, right? That sounds like typical government bureaucracy that nobody should care about. And that is exactly what the mainstream media wants you to think. CNN covered it for 28 seconds. CNBC cut to commercial break. Bloomberg buried it on page 17 of their website with a headline designed to make your eyes glaze over. But here is what none of them told you. Section 3 of this executive order contains 4 words that just ended the financial system that has controlled your wealth since 1971. Those 4 words are strategic monetary reserve metal. For the first time in 53 years, the United States government has officially reclassified silver from an industrial commodity to a monetary metal. Now I need you to understand why this matters, because if you miss this, you will miss everything. Since August 15th, 1971, when Nixon closed the gold window, the entire global financial system has been built on one fundamental lie. The lie that gold and silver are just commodities, just rocks in the ground, just industrial inputs no different from copper, or aluminum, or zinc. This lie allowed central banks to print unlimited currency. This lie allowed governments to accumulate unlimited debt. This lie allowed banks to suppress precious metals prices for decades while they stole your purchasing power through inflation. And today, at 11:43 a.m., that lie officially died. But wait, because it gets so much worse for the banks. This executive order does not just reclassify silver. It activates dormant provisions in the 1985 Monetary Metals Act that require the Treasury Department to maintain a strategic silver reserve equal to 18 months of domestic industrial consumption. Let me give you the numbers, because the math here is absolutely devastating. Current Treasury silver holdings sit at approximately 22 million ounces. 18 months of industrial consumption requires approximately 180 million ounces. This means the United States government now has a legal mandate to acquire 158 million ounces of physical silver. That is 20% of total annual global mine supply that the government must now buy regardless of price. And here is where the death bag enters the picture. For years on this channel, I've been warning you about the concentrated short position held by major banks on the COMEX futures exchange. I call it the death bag, because everyone who touches it eventually gets destroyed. According to the most recent bank participation report, these banks hold a combined net short position of 215 million ounces of silver. Now, pay very close attention to this next number, because this is where your mind should explode. Total registered silver inventory in COMEX warehouses, as of Friday, January 17th, sat at just 18.4 million ounces. The banks are short 215 million ounces against 18 million ounces of available supply. They are short 11.7 times more silver than actually exists for delivery. Under normal circumstances, the banks escape this impossible situation through cash settlement. When contracts come due, instead of delivering physical metal, they simply pay the dollar difference and roll the contracts forward. They have been running this scheme for decades. But Section 7 of Trump's executive order just eliminated cash settlement for any contract connected to strategic reserve acquisition. Physical delivery or criminal penalties. No exceptions, no extensions, 90 days. The banks holding the death bag just received a 90-day ultimatum that is mathematically impossible to satisfy. They cannot deliver 215 million ounces when only 18 million ounces exist. And now they cannot pay cash instead. Do you understand what this means? The largest short squeeze in financial history just became inevitable. Not possible, not likely, inevitable. And we are already seeing the first explosions. Within 30 minutes of the executive order being signed, silver opened on Asian markets at $147 per ounce. By noon, London time, it crossed $200. Right now, as I record this script, silver is trading at $273 per ounce and climbing. The COMEX has announced it will not open for regular trading while circuit breakers are evaluated. Let me translate that for you. The COMEX is never opening again in its current form. The paper silver market that has suppressed prices for 40 years is dying in real time as you watch this video. Now let me show you what is happening to the banks, because this is where it gets absolutely insane. At 2:13 p.m. Eastern Time, Deutsche Bank announced a temporary suspension of all precious metals trading operations. Their stock dropped 19% before trading was halted. At 2:41 p.m., HSBC acknowledged material exposure to precious metals derivatives and announced an emergency board meeting for tomorrow. And here is the one that should make you fall out of your chair. At 3:17 p.m., the Federal Reserve announced an emergency liquidity facility of $94 billion specifically designated for financial institutions facing precious metals margin calls. Let that sink in. $94 billion emergency facility for silver margin calls. The Federal Reserve just accidentally told you exactly how big this crisis really is. They do not create $94 billion emergency facilities for small problems. They do not announce emergency measures 3 hours after an executive order, unless something has gone catastrophically wrong. But here is what the Fed desperately hopes you do not understand. $94 billion sounds like a massive number, but the total silver-linked derivative exposure across the 4 major death bag banks exceeds $515 billion. The Fed's emergency facility covers approximately 18% of the total exposure. They are trying to stop a tsunami with a garden hose. They are trying to put out a forest fire with a water pistol. And Section 12 of Trump's executive order makes everything infinitely worse for these banks. It establishes a presidential silver commission with authority to investigate and prosecute any entity engaged in artificial price suppression. This commission has subpoena power. It has asset seizure authority, and it creates personal criminal liability for executives who participated in manipulation schemes. This is not civil liability where banks pay a fine and everyone keeps their bonus. This is criminal prosecution with prison sentences. What do you think happens when mid-level traders and compliance officers realize they might go to prison while their bosses try to blame everything on them? They start cooperating with investigators. They start providing evidence. They start explaining exactly how the suppression scheme operated for the past 20 years. The death bag is not just detonating financially. It is detonating legally. And the dominoes are falling faster than anyone predicted. Now let me explain why. $1,000 silver is the mathematical floor, not the ceiling. Gold currently trades at $4,800 per ounce. Throughout recorded human history, the gold-to-silver ratio fluctuated between 8 to 1 and 16 to 1 based on geological abundance. Today, before this morning's move, that ratio sat at 66 to 1. This means silver has been artificially suppressed to 1/5 of its historical value relative to gold. At the historical, average ratio of 12 to 1 silver should trade at $400 per ounce right now. But that calculation assumes adequate supply, which simply does not exist. Total above-ground silver inventory globally, including all ETF holdings and all vault holdings, equals approximately 1.2 billion ounces. Above-ground gold inventory equals approximately 6.5 billion ounces. The actual physical ratio is 5.4 to 1. At this ratio against $4,800 gold silver's fair value is $889 per ounce. But we are not in a normal market. We are in a market where the United States government just announced it will acquire 158 million ounces at any price. We are in a market where China just announced at 4:30 p.m. Eastern Time an immediate and complete suspension of all silver exports, removing 26% of global supply from the market indefinitely. Think about what just happened. The U.S. announced it needs 158 million ounces. China removed 330 million ounces from global supply. Combined, that is 488 million ounces of demand and supply shock hitting a market that only produces 840 million ounces annually. Russia announced silver will be added to their national wealth fund with $15 billion in initial allocation. India announced emergency meetings on silver reserve requirements. And most importantly, the Bank for International Settlements in Basel issued a statement acknowledging that silver's reclassification may require reassessment of global banking frameworks. When the BIS speaks, every central bank in the world listens. This is not a drill. This is the controlled demolition of the post-1971 monetary system. Let me tell you exactly what happens over the next 7 days based on my analysis. Tomorrow, Wednesday, the COMEX will extend its trading halt while implementing emergency position limits. Thursday, we will see the first major bank casualty. One of the 4 death bag banks will announce trading suspension and emergency merger discussions, likely a European institution. Friday, President Trump will hold a press conference announcing acceleration of strategic reserve acquisition and potentially invoking Defense Production Act authority. Over the weekend, emergency meetings will occur at the BIS, the IMF, and among G7 finance ministers. The public narrative will be market stability. The real agenda will be negotiating silver remonetization terms. Monday, when markets attempt to reopen, silver will gap to somewhere between $800 and $1,200 per ounce. Trading will halt again. The paper market will be declared officially dead. By the end of January, we will be living in a completely new monetary reality. So, what does this mean for you right now? If you already own physical silver, hold it with everything you have. Do not sell for paper currency at any price. Do not get scared by volatility. You own real money that is being revalued to its true worth for the first time in 50 years. If you do not own physical silver, you have approximately 6 hours before your window closes permanently. Dealers are already showing out of stock notices across the board. Premiums are exploding to 80 and 90% over spot. By tomorrow morning, physical silver will be functionally unobtainable at any price. This is not fear-mongering, this is mathematics. When government demand plus industrial demand plus investment demand exceeds available supply by 500%, prices do not rise gradually. They gap violently to whatever level is necessary to ration remaining supply. What you do in the next 6 hours will determine whether you and your family stand on the winning side or the losing side of the greatest wealth transfer in 500 years. The death bag is detonated. The reset is here, and nothing will ever be the same again. If this video opened your eyes to what is really happening, share it immediately with everyone you care about. They need to understand this before tomorrow morning. Subscribe to Boring Currency Archive and turn on notifications, because I will be bringing you live coverage of the COMEX suspension and the first bank casualty announcement as events unfold. This is the moment we have been preparing for. Stay safe, stay vigilant, and may God bless you all.